Yes, good afternoon, everyone. We are live. Welcome to today's live stream. As you guys know, we are VBit Technologies. My name is Gershom Polcott, and as always, we have with us our co-founder, Mr. Jason Wong. Mr. Wong, good afternoon, sir.
Good afternoon, everyone. Good afternoon to you, Mr. Gershom and James over in San Francisco.
Yes. Oh, by the way, correction. So it's good afternoon here, right? But as you guys know, we are international. So good afternoon, good morning, good night, wherever you are. Good day to you. Boy, James, how you doing, buddy? I
Hey,
have to
I'm
make
doing
sure,
well.
we're getting so international these days. You got to make sure you get everyone, in there. So it's all good.
That
Yeah,
is
I'm
Same
doing
very
well,
way.
man.
true.
Can't complain.
Okay. Things in California is all good. How the fires kind of like taming down now?
Yeah, they chilled out a little bit. I don't see the smoke anymore, and I can smell the air is changing. It sounds like fall. It smells like fall's coming. They got pumpkin spice at your local Starbucks, and I'm just excited for the holiday season.
Pumpkin spice. I like that. That's nice. Fall type flavors. How about how is the coronavirus out there these days? Are you guys still seeing high numbers? What's going on?
So California Governor Gavin Newsom he put out some information yesterday saying that there's been a dip across some of the major areas, San Francisco, Los Angeles, San Diego, and that they're reopening movie theaters and stuff like that. So it looks like we're moving in the right direction.
Okay, that's good. That's good. I'm glad to hear that. Mr. Wong, it's been a great week as always. Um, you know,
Absolutely.
uh, yeah, I'm super excited, man. I was talking, I was talking to a vice chair, Mr. Gao, the other day, and he said, "Man, I could
Sure.
barely sleep. He's so excited. There's so many things going on with the company. We're growing, we're expanding,
Yep.
and new members coming on board, and they're all excited. So it's beautiful. It's a wonderful, wonderful time for us, Mr. Wong. I'm so excited.
I think all of us are just super excited, and I can tell you, I couldn't go to sleep that night after Tuesday's members meeting. I come back and I spent a few hours with you guys, and I went back and talked to our CEO, and he shared some of the future plans with me in the next 6 to 12 months to come. And let me tell you, I was sitting on my bed, and I just couldn't get myself to sleep, and just so excited with the stuff that are in the pipeline, stuff that we're gonna be doing, rolling out.
Yeah,
Super excited.
uh, absolutely, man. I'm super excited. It's funny, Sal. Sometimes, because we are here at headquarters and, we see the CEO every now and then. You guys, as partners, you guys are in meetings all the time and, planning and strategizing and whatnot. And so, but for myself also, it's just sometimes hearing some of the plans that's in place and some things in the pipeline, but we also understand that we cannot put certain information out too quickly until certain things have developed and get to a certain stage. But you're right, Mr. Wong. There's so many things that's in the pipeline for the company, and for and the thing is, everything that we do, it's a business. We all get that part of it, but everything that we do is to make it to where our clients and customers, have access to certain things and is well served in the Bitcoin cryptocurrency space and mining and whatnot. And like our CEO said from the beginning, we want to be a full service financial company, not just a Bitcoin mining company. And some of the things that I know that you guys are planning and stuff, it's heading in that direction. So it's awesome, man, to be a part of what's going on here. And the thing I want to say about our CEO, I mean, I'm sure a lot of you guys probably haven't met him yet. Some of you have. When you meet him, it's such a very humble, nice, super nice guy, just straight up humble, talk to anyone, treat everyone with respect. But when you sit down with that man and get to pick his brain and talk to him, he's such a brilliant guy. And, he's a big thinker guy, big vision. So I love being around him, man. And he's a very awesome person to be around and to be a part of his company, what he's doing. So it's awesome. All right, Mr. Wong, look,
Yeah.
Bitcoin right now is like, we're going to say something else?
No, go ahead. Go ahead.
Okay. No, so I was saying, last time we talked, I was looking to see, first of all, to see if Bitcoin could break above the 11,000 did. And then I want to see it break around above 12,000 and establish 12 as a base, but it hasn't done that. It break around above 12,000 and pulled back. But we all expect these pullbacks, right? And so right now we're sitting at around 11.5. Today it's been, I think it was up like 5% or so today, which is pretty moderate. That's okay. That's nice. But I was reading an article today, which actually is the first topic that we're going to talk about, that, this analyst is thinking that the next leg up on Bitcoin, he's thinking that we could actually blow past 12,000 and blow past 14,000 and take out 15,000, which is pretty aggressive. But his argument makes a lot of sense. The thing with Bitcoin is, it always, make this parabolic move every now and then it pulls back and consolidate for a while, kind of like go sideways and then make another parabolic move. And so, based on the things that it's doing right now, based on this last pullback, is it possible that it could take out 12,000 and 14,000 and go straight to 15? Hey, I think so. What do you think, Mr. Wong?
I don't have a crystal ball, but this seems to fit right into the price pattern that we have seen in the last couple of years. That seems to be how the Bitcoin price moves. Actually, if we look at the recent rally, the altcoins start to have the run up first, and then followed by the Bitcoin. So the altcoins actually is experiencing some pullbacks right now. We think that some of these altcoins has another 10% or so to pull back before it goes, on another, another run again. So Bitcoin may very actually be following that similar pattern. So that's what we'll have to see.
There are quite a few people who they're thinking that around Labor Day, which is coming up in a couple of weeks.
Yeah.
So Labor Day is a very interesting point. And so we are expecting to see a lot of things happen around Labor Day, not just in the cryptocurrency space, but in the traditional markets as well. Because typically Labor Day is when people start, coming back from their summer vacation. They start looking at their portfolio. They start to readjust their portfolio based on what happened over the summer and stuff like that. And so the Labor Day timeframe is always a critical juncture for just the market in general. But with 2020 being the way it has been, right, for the past few months in 2020, this has been a very different year. So everyone is looking at Labor Day to see what's going to happen right around or right after Labor Day. I'm looking at it too to see what's going to happen. But there are many analysts thinking that, right around Labor Day, we could see a serious parabolic move in the crypto space. But like you said, Mr. Wong, we don't have a crystal ball. All we can do is look at, past performance. We can look at the current landscape. We can hypothesize and think about certain things and come up with an opinion. And it's not etched in stone. But right now, there are a lot of analysts thinking that, hey, keep an eye on Labor Day or right around Labor Day. A lot of things are going to happen. And so I'm very curious to see what's going to take place in the next couple of weeks. What say you, Mr. Wong? What do you think about it?
Yeah, I remember we brought this topic up a couple of podcasts ago. And we actually went through some of these estimates that these analysts had come up with. So they all seem to think that right around the Labor Day or after the Labor Day, we're going to see another bull run on the crypto side.
I think so too. And so right now, being at 11.5, and that's one of the reasons, thinking about taking out 15,000, I think that's in play. That's definitely in play. At the same time, we could see a pullback. Rather than taking out 15K, we could see it pull back to 10.5. That's very possible. We can even see it pull back below 10. But the thing that I keep in mind is if we see a dramatic pullback, like back to 10.5 or even below 10, retest 9,000 again, then I would look for a serious move on the upside once that happens. And I think if we see Bitcoin fall below 10,000 again in this next couple of months, let's say 1-2 months from now, if that happens, I think it's going to be the last chance that anyone is going to have to buy Bitcoin at these prices. If you're buying Bitcoin, that is, like 10,000 or even right below 10, like maybe 9,000, somewhere around there. If that were to happen, that's going to be the last time, because based on what's taking place right now in the economy and what the Fed is doing and all that, come 2021, it's going to be some very, very serious decisions being made by everyone. And particularly as we approach the election, I think, Labor Day going into the election, it's going to be volatile. It really is. But I think with everything that's in place right now, I think Bitcoin is going to shine dramatically in the next couple of weeks, couple of months coming up as we approach Labor Day, as we get past Labor Day and head towards the election, because this election is going to be very, very turbulent. Well, but I think go ahead, Mr. Wang.
Yeah, I was going to say, none of us are price analysts here, right? Or or trying to give any sort of like financial advice. But if Bitcoin does pull back to below 10.5 or below 10, once again, Bitcoin is on sale. So
yes, exactly.
Take advantage of it.
Yes.
Because these sales, it's kind of like the flash sales. You never know when it's going to be gone. That's just our personal opinions. But that's how we look at it. Yeah, and especially you're right, Gush. With the election that is that is coming up in a little over 2 months from now, and both RNC and the DNC they both finished their conventions. Now it's really for them to kind of to show that, hey, you know what, the economy has its leg to stand on its own, and people are going to make money in the stock market. Jobs are being created. They're going to do everything they can to, so to speak, make the book look good, right?
Yes.
Yeah. Make their report card look good.
Sure.
Yeah.
I'm not sure if you guys are into horse racing. When I was younger, I was really big into horse racing back in Jamaica. I had a friend that was a jockey, and I would go to the track all the time and watch him, train and go watch some races and stuff. And the most important thing in a race is coming around the bend to the home stretch. All the stuff that goes on, in the backhand is just jockeying for position, so to speak. But then once you make that turn for the home stretch, that's when things really heat up. And so that's how I look at this election. Right now, after the convention, this is when things really, really heat up. So if you guys think things were bad before with all the mudslinging and all the stuff coming out, forget about that. The next couple of months is going to be crazy, because it's going to be very intense. So we'll see what happens. Mr. Wang, speaking of that, our second topic, okay, so let's get serious for a second, guys. I mean, I know we're always serious. We try to joke around a little bit, but let's get serious for a second. So the Fed came out yesterday, the federal chairman came out yesterday and literally told the public that, hey, right now, our number one objective is to debase your money. That's what he said that. Like, their job right now, their mission is to increase the inflation. So can you imagine that you have a government that is telling you their job right now is to make your money that you have in your pocket worth less, right? And
right.
We've talked about this before and so many times, but we understand this thing because we do research, we read, all that stuff. But to hear the Fed chairman come out and tell the public, like, yes, that's what we're doing. We're going to target to increase the inflation, to the point where our CEO this morning had to make an announcement in a Telegram group that, hey, guys, see right here in writing, the Fed is telling you that their job is to devalue your currency. So if you have your savings tied up in the dollar, right? And I'm not talking about just dollar per se, but anything that's dollar denominated, then you have to start taking steps and start taking measures to get away from that. You have to, because your very own government, their mission is to debase your currency. I couldn't believe they said it, even though we know, but to hear them say it, I was just like, okay, I see what's up. Mr. Wong, what's your thoughts about all that?
Well, we know that's what the governments are doing, right? I mean, we see all these Fed policies and actions that have been taken, and the results of these policies and actions, the purpose is to devalue. I mean, the result is to devalue our currency. So I am not surprised, right? What I'm surprised is it takes someone to literally come out and tell you this, even though their action has always been that way, right? Now
Yes.
They're coming out and tell you that also. What are you going to do? What are you going to do about this to protect your position? And that's the question that I have for all of our audience.
Yeah. I posted something on Facebook the other day, and I was just having some thoughts, and I realized that the inflation is flowing into the stock market. And even beyond that, I was thinking about, with all the money printing that's taking place, we should be seeing more inflation than we're seeing right now. I know we are seeing some. I know someone posted on Facebook the other day that they went to the grocery store, and when they look at their bill, they were shocked because the inflation is starting to creep in your everyday item in the grocery store, right? Because for the most part, a lot of inflation is always flowing into certain products like, electronics and so forth. But now it starts to show up in everyday goods. But even so, I still think that without the money printing, I was expecting more inflation. But then I realized that the reason why we aren't seeing as much inflation is because the money velocity has been reduced to almost zero. And one of the reasons for that is because, the whole COVID-19 lockdown, where we weren't out there spending as much as we normally would. So the money is not circulating as fast as it was supposed to, because if they're printing all this money and we had a normal activities in the economy, then we see some serious inflation. But with the activity being reduced, we're not out there spending. That's one of the reasons why we're not seeing as much inflation, because the money velocity has been reduced almost zero. But that being said, even with that, a lot of inflation is still flowing into the stock market. But what it also does, it widens the gap between the rich and the poor, between the have and the have-not, right? Because, you have to find a way to increase your income, your savings, rather than just depending on a typical 9-to-5 with a paycheck, right? And some of us have realized that, hey, I need to figure out how to at least participate in the inflation in the stock market. And some people are doing very well at doing that. But that's where a lot of the inflation is flowing. But the Fed trying to target inflation, they say 2%, because right now their numbers are showing them that inflation is only 1%. I think that number is a flawed number. If you look at John Williams' Shuttlestat, he's thinking if you use the same measures that they did back in the 80s, the inflation right now is around 10%. But they manipulate the inflation numbers. They use different things to measure the CPI and stuff like that. So they're saying, hey, inflation is only 1%. We're going to target 2%. I don't think they're going to be able to control the inflation. I think it's going to get out of hand. And when it does, that's when we're going to see some serious inflation taking place, because the economy is not like a thermostat. You can't just turn it up and turn it down as you like. And I think they're thinking that they can control the inflation. I think at some point it's going to get away from them, Mr. Wong. What's your thought?
I think you put it in a, very nicely. The economy is not a thermostat. It's more like a freight train. Once you start building up momentum,
can't stop it.
It's going to be very difficult,
yes,
if not impossible, to try to stop it. All right. and it's going to take a lot of effort to try to slow it down or stop it. And that's the generally the issue. And in fact, let me jump to a different topic a little bit. And that is the reason why the Chinese government is pushing for digital, to digitize their RMB or renminbi, is so that they can better target and have better flow and better control on the velocity of the money they're trying to pump into the economy or extract out of the economy. All right, think about that for a second. So, and going back to another point, we have talked about this time after time. We all know, some of us, we have taken a position to diversify our portfolios, our holdings, or whatever that may be. But how many of us have diversified our income source? I bet you a lot less than, the people that have taken the steps to diversify their portfolios. Guys, we need to not just diversify our portfolios, our holdings. We need just as equally important to diversify our cash flow or income source.
Absolutely. 100%.
What do you think, Gershom? Yep.
Yes, I agree with you 100%. So you take, and we talked about this a couple of weeks ago, and I made a statement that, I think, Mr. Wong, you agreed, is that the government is not here to save you. No one's coming to save you per se, right? Because just think about what happened yesterday when the Fed came out and said, yeah, we're going to increase the inflation. They're not your friends. They're not looking out for you. They're looking out for themselves and for their cronies, their buddies on Wall Street. Look at Bezos. Bezos is now worth, let's say, $200+ billion. I mean, in the past few months, his wealth has increased over $50 billion. Right? That's all because of the Fed action. That's why these guys are increasing their wealth 5 times, some of them, right? So the Feds, they're not your friends, guys. They're looking out to have more control and to flow the money into the pockets of their friends. As a matter of fact, the video we have for you guys today is a little different. And before we play the video, I want to say something to you guys. I read a book a long time ago. It was a book, forgot the exact title. It's been so long since I read it. But it was about yogi in India. As a matter of fact, after I read the book, I realized that Steve Jobs actually recommended that everyone should actually read that book. I'm gonna look at the title and drop in Telegram group later. But my point is this: in that book, one of the main things I took away, the character that was writing the book, he was a pupil of a yogi, and the yogi once told him that, look, you should be like the wise ant, right? Be like the wise ant, meaning that if you take a handful of sand from the beach and a handful of sugar, and if you mix them together and throw it on the ground, the ants would come, take away the sugar, and leave the sand right where it is. And I think that always stuck with me. Like when I read information or listen to certain thing, I'm thinking, be like the wise ant. Take away what's important, what's good. All the garbage, leave it alone, right? And the reason why I'm saying that, because I want to play a video for you guys. I want you guys, don't get emotional. This person right here is a person I listen to a lot, and he's a good researcher. And the information I want to share with you guys is let you know, if you have a 401k, a typical pension, what's going on right now in Wall Street and the people that they have, running the system, they're not looking out for you. They're here looking out for their cronies, and they're all doing it together, the right and the left, the Democrats, the Republican. That's why I tell people all the time, don't get caught up in this right-left paradigm stuff. They're not your friends. So this video is going to show you how the hedge funds, that's running all these programs are all friends of the Republicans and the Democrats, and they're here to take your money. They're not your friends, guys. So that being said, James, if you're ready, I want to play this video. It's like maybe close to 10 minutes long, but just think about what's been said and process it and see how you can make sure that you position yourself so you don't get caught up and have your 401k decimated. Because I remember what happened. I have a personal experience with that. When the market crashed in 2008, I saw my parents, their retirement plan and their funds that they had in retirement got diminished by over 40%. So imagine you're in your 60s, right, looking forward to retire, and then saw your retirement savings got slashed over 40%, right? And so it happens all the time. And Wall Street, every time this happens, Wall Street cronies get richer and richer and richer. So let's watch this video. Hopefully you make some sense out of it, and then we come back on and talk about it. Go ahead, James.
We are turning the monthly pages into September, only 2 months away from one of the most turbulent market events in the history of my life. The presidential election of 2020, the Bidester versus the Trumpster. But the more I research into what is going on, the more I realize this is just all a smokescreen to loot the American public from either side, the Democrats or the Republicans. Let me try and explain. While this world has been distracted, those in power in this country have been pushing for sweeping changes to retirements of Americans, aka 401ks. What are the changes? Well, the Department of Labor at the beginning of June announced they wanted to change the 401k rule, which stopped these employee-sponsored retirement plans from having portfolios which contain private equity investments from firms like Fidelity, Vanguard, and of course BlackRock. Now this is throwing these retirement age investors to the wolves, the literal wolves of Wall Street, where risk is an afterthought to these guys, especially BlackRock and CEO Larry Fink, who is running the government's corporate credit facilities in collaboration with the Treasury and the Fed, initiated to save our economy. BlackRock, with the government facilities, has been given the power to quarterback an unprecedented amount of money, $750 billion to leverage in the corporate bond buying program, which includes both investment grade and those junk bonds. So our government already gave a certain private equity firm money, the most ever handed to a firm like this in the history of our country. And that's coming out of our taxpayers' pockets. And now they're attempting to get access to even more money from one of the only things the general American public gets that is tax deferred, 401ks. Now, if you didn't know, it's a place where the average American, based on statistical numbers, stores the largest majority of their wealth. It's the place, since their inception in the late 70s, that have become a core part of the American dream. Our citizens have put all their eggs into one basket, the supposed safe place to retire, as 401ks in the past used mutual funds, bank collective investment trusts, and insurance company pooled accounts whose portfolios were the focus on publicly traded stocks and bonds, and usually extremely low risk. But private equity vehicles and investments are extremely high risk, usually a fund which is a portfolio of privately held, usually struggling companies, and the fund's goal is to rehabilitate or liquidate them, enriching the passive limited partners and the general partners, including those managing the fund. Now, direct investments as a limited or general partner is usually restricted to high net worth individuals, as these individuals are in a better position to take on the massive risk that comes with these, and the astronomical fees charged by them. But these high net worth individuals have stopped pouring money into this market. It's literally dried up to desert proportions in the past 8 months. Let me show you why. Here is a list of the 113 companies that have filed for bankruptcy throughout the year. Big names I'm sure many of you recognize: Fairway, Pier 1, True Religion, JCPenney, J.Crew, Hertz, 24 Hour Fitness, GNC, Lucky Brand, and more. Now, CB Insights also has this listed, and let's just search by the term private equity in their list of companies. It comes up 17 different times. Neiman Marcus, private equity company saddled the company with debt. Private equity bought it. Private equity, and private equity again. So a place where these firms get their money, high net worth individuals, they notice this and they ain't going to be putting their money in a fund house of cards on the brink of collapse. For example, Wally Ockby, senior analyst at 8 Wealth Management Group, stated the pool of available capital from high net worth investors for private equity has recently dried up. They're looking for cash anywhere they can get it. Therefore, they go to 401ks, where investors typically don't understand what they're investing into. So back to 401ks. There is a lot of cash and value locked up with American 401ks. The 401k marketplace is $8.9 trillion, or just 42% of America's $21 trillion GDP. It's massive, and if this gets finalized, the rule to bring in private equity, and it looks like it just might, you know who's gonna go wild like a raging party that goes until 5 a.m.? Wall Street, and of course those private equity firms. Who is Wall Street? And those in charge want to get it passed before election time because, like I mentioned, the clock is ticking to a turbulent market event, the November election. And now it's time to explain why it doesn't matter what happens. It will all be the same, turbulence or not. As we know, the Trump administration chose BlackRock to be its helping hand. Well, if you've watched my channel for any amount of time, you know so did Obama. They contracted Fink and BlackRock to help with the 2008 financial crisis, and Fink was originally brought on by George H.W. Bush. Well, the other person who could win, the Bidester, he is going to pick BlackRock too. The Campaign for Accountability covered it. Middle-class Joe Biden courts Wall Street oligarch BlackRock's Larry Fink. Their article states, in January, The Atlantic reported Biden went to see Fink, who told the ex-vice president, "I'm here to help," which Biden took as a sign that Fink wanted a role in his campaign, assuming he runs. Which we all know he did run, and then the New Republic covered it further. Their article states, an even more full-throated merger of BlackRock and the state could be on the horizon as CEO Larry Fink cozies up to Joe Biden's presidential campaign, likely angling for a top cabinet post. Whatever the result of the November election, BlackRock is poised to come out a winner. And then CNBC seals the deal in their article titled, Biden donors privately float big names, including Elizabeth Warren and Larry Fink, for key roles. So whatever happens, Trump wins, Biden brings home the bacon, Wall Street will continue to be pumped to beyond proportions, as Fink is in the driver's seat, no matter what. So I know I predicted another market collapse come November, and it's still very likely a big one, but it won't be an apocalypse type scenario, like I once thought. I should have known no matter the outcome, BlackRock would be controlling the economic strings. But I didn't realize they were already a shoo-in with Biden. So this is what's going to happen in my own opinion. Trickle-down economics at their finest. Now the stock market is much bigger than the crypto markets. Latest data taken at the end of June puts the US stock market worth over $35 trillion. As of yesterday, the crypto markets were just over $380 billion, or just 1.08% of the behemoth that is Finance 1.0. Now, private equity firms and their investors, their money is tied up in the behemoth. And with the news of the 401ks, this behemoth will keep growing larger. But so will the crypto markets. Why? I wonder if BlackRock is eyeing the tiny market. Well, why did they tweet this in September of 2019, last year, praising blockchain and having a blockchain lead, Robbie Michinik? Now, let's just take a look at the top private equity firms. Number one on the list is, of course, Blackstone. No, not BlackRock, but Blackstone, ran by Steve Schwartzman. Steve is the one who gave BlackRock the initial capital to get going. Larry Fink used to work for Steve, and the name for BlackRock was thought of by the two. So Blackstone, what's their thoughts on crypto or blockchain? Well, Steve in September of 2019 said this regarding blockchain. There is all kinds of uses you can have from certain executions. Blockchain technology is a very good idea, and it will end up being adopted because it's good technology. Applying it to the creation of money is sort of, for my taste, pretty odd. He was asked by the reporter, so in the future, do you see Blackstone investing in companies that are using blockchain technology? And he replied, that would be good, because it's a sound, very interesting technology. Okay, that's just one, the most powerful and biggest, but it doesn't mean the trend for these firms is going the way of blockchain and crypto, right? Well, number 2 is Carlyle Group, and guess what? Just in February of this year, he joined the advisory board for a blockchain payment startup called RadPay. Okay, just 2 out of the top. How about number 3? Well, according to that list, that is KKR Inc. and Company. And guess what? In June of last year, the co-founder Henry Kravis invested in a crypto fund, a flagship one to boot, Tpg Capital out of San Francisco. How about number 4? They can't be going blockchain too, right? Well, that is Tpg Capital, and of course they are. Their venture wing, Tpg Growth, just a few months ago in April, led the $100 million funding round for the blockchain and AI-based identity platform on Fido. Now, the more capital access these guys get, the more risque things they put their money into, like blockchain and crypto. It's good short-term for the crypto markets, but not good for the system overall and long-term. I've explained it 100 times, so I'm not going to explain it again. But the leverage game these guys are playing eventually comes to an abrupt end. And when it does, yikes. This year, next year, down the road in 2023, 2024. I don't know, no one knows. But hopefully you, me, and our wealth survives as we hold on to the assets of the future. Cheers, I'll see you next time.
All right. So I know it's a kind of a long video, like 10 minutes or so, but I think it's an important video. And one of the things I always say to people is when it comes to politics and what goes on in Washington, Wall Street, you know, George Carlin said it best. It's a big club and we ain't in it, right? And if you notice, it's so true, because think about it. Larry Fink, the guy that runs BlackRock, and BlackRock manages around, they said like close $7-8 trillion under management. But what they're realizing that a lot of high net worth people are kind of like pulling their investments out of these hedge funds. And so now they're looking at the 401k market because there's a lot of money locked up in there, right? And they want to get into the 401k market. And so our government just passed a new law that allows hedge funds to now invest and get involved in the 401k market. That means that there's so many people's retirement that's going to be at risk. And so it doesn't matter who's in office. You know, whether it was George Bush, he was dealing with Larry Fink and BlackRock. Barack Obama, Larry Fink and BlackRock. President Trump, Larry Fink and BlackRock. And Joe Biden, it's one big club, right? So as I keep saying, the government is not your friend. It's one big club and it's all for themselves. And it's really sad, you know, to see this happen over and over and over again, where so think about it. When the stock market crashed, the money doesn't go to money heaven. It goes somewhere, right? It just doesn't go in your pocket. It goes into their pocket, right? And so when these hedge funds start to get involved with people's pension and retirement, it is nothing but bad news, because they are risk-taking and they're highly leveraged. So, you know, just like when the long-term capital management blew up, it almost took down the economy. That was a hedge fund that blew up, because they were heavily invested in the Russian bonds. When Russian collapsed, they collapsed and almost bring down the Japanese economy, and almost bring down our economy as well. So these hedge funds, you know, they play very, very risky games with people's money. And so now, if they start to get involved with 401ks, nothing good can come from this, guys. I'm telling you, nothing good can come from this. So it's really sad to see, but you know, they get their power from our politicians that put them in place, and they all do the same thing, whether it's on the left or on the right. So I always say, don't get caught up in this right-left paradigm stuff, Democrat, Republican. Nah, it's all the same. It's one club, and you're not in it, okay? So just think about it, you know, think about that. And if you're someone right now that have, you know, all of your retirement tied up into a 401k, You got to figure out a way to start getting it out of there, right? I mean, I know that the market's going up right now because of the money printing, but that's not going to last forever. At some point, that bubble is going to burst, and so will your 401k. So I say, think about leveraging yourself. Bitcoin mining is a great way to do that. Not financial advice, just my opinion. What say you, Mr. Wong?
I personally went through the 2000 internet bubble, 2008 financial crisis, right? And then most recently, the COVID-19, economic crisis that's triggered by the global pandemic. So I feel like, for every 8 to 12 years or so range, my portfolio gets a 40%, reduction. And I work hard and hard and hard, try to build it back up to where it is again.
A 40% haircut.
And I get another 40% haircut, right? So, and that's what has been happening. Seriously. I know that it's happening, but the question is, what are we doing about it? What can we as an individual do about that? I know I am not in that special club, left or right. I am not in it, right? Oh, by the way, Gershom, if you know a way to get into the club membership, please let me know. I'll be very much interested. Yeah.
I'll make some phone calls, okay?
Could you please?
Yes, certainly. Yeah. I will do. No worries. I got your back, Mr. Wong.
Thank you. We got to do something about it. With all jokes aside, right? I mean, we know, the history repeats itself, and it already repeated itself 3 times. All right, every 8 to 12 years, essentially. Market crash, 30-40% wiped out on average. And then what do? We'll go back to our job, right? Going back to doing the same thing again. Work hard, putting in 50 hours, 60 hours, no weekends off, away from our family. For what? Just so that we can get back to the position before the crash. It takes about 8 to 12 years. Then comes another crash.
Yes.
And it is out of your control, unfortunately. Because none of us have a crystal ball. None of us are in that club to know, when those haircuts are going to be coming. So, I would say personally for me, I would look into ways of, not just diversifying my portfolio, but also diversifying my income source. They always say a successful entrepreneur or millionaire, they always have multiple cash flow or income source. Do not just rely on one of it, because you can lose your job. And there you go. You just lost your income source. I was at talking to one of my family members. Actually, both of them lost their jobs, and during this pandemic, and that's their only income source. So it is very real. It is very real. Fortunately, there are things that we can do as an individual. We don't have to be in that club in order to do something to protect ourselves, from these economic crises that seems to happen every 8 to 12 years.
It comes down to personal responsibility, right? You have to take responsibility for yourself, because no one's going to do it for you.
Nope.
And it's very unfortunate, and as I said before, and I've said it a few times, but the reason why I keep bringing it up, because it's real for me to see what my parents went through in 2008. And so can you imagine, like I said a few minutes ago, imagine someone right now who are in their mid-60s, early mid-60s, maybe even late 60s, and they see the 401k going up because, like I said before, the inflation is flowing to the market, and they may feel good about it, right? And with a blink of an eye, they could see that get cut in 20, 30, 40%. And there's no recovery. If you're in your 60s or, close to retirement age and your 401k get decimated by the next market crash, how you going to recover from that? You can't. You just can't.
Extremely difficult.
It's extremely difficult. Absolutely. So you got to make sure your government don't care, man. They don't care if you're on the street. They don't care if you're eating cat food. They don't care. Right? So you cannot depend on them to take care of you. And no one's coming to save you. So you have to start thinking about taking measures to make sure that you don't get decimated. And I think one of the best ways to do that is start looking at alternative measures like Bitcoin mining, things like that, because this is a new technology, whether you like it or not. And even those hedge funds, like the video shows you, even those hedge funds, as crooked as they are, they're also looking at the blockchain and cryptocurrency space because they know that is that's the economy shifting to blockchain cryptocurrency, right? And they know that. So that's why they're starting to tip their toes. But, I've said this before, when these hedge fund and Wall Street firms come into the cryptocurrency space, it's a good thing initially because they bring a lot of money. They have deep pockets, but everything have a two-edged sword, right? Because they bring the money, but they also bring their shenanigans, and these guys, they play fast and loose. And so, when they come in, yes, the money will flow into the crypto space, but they're going to start, producing derivative products, all kind of exotic products. And that's when things get shaky. So just be mindful of that, okay? Just be mindful of that. All right, Mr. Wong, that being said, we're going to talk about our last topic and wrap it up. So this last topic we're going to talk about, right? Mm-hmm. It said that Bitcoin is, and I truly believe this also, because when you think about all the money that ever been created, it said Bitcoin is the most advanced form of money ever created. And when you stop and think about all the benefits that Bitcoin brings to the table, there haven't been anything like that ever. So if you look back in history and look at all the things that were money, and there've been some crazy things that have been money before: feather, seashells, salt. I think people understand the history of money. Most of us only think about this little piece of paper and these ones and zeros on the computer screen. But back in the days, money used to be all kind of things, but nothing has ever been as hard, right? Because even gold, and up until Bitcoin, gold was the best form of money. But gold is not as hard as Bitcoin because we don't know how much gold is out there. We don't know if, someone may find a gold deposit somewhere, some parts of the earth, right? We just don't know. So gold is not as hard as Bitcoin. Now, I know people say, but, you can touch gold. Why didn't they touch my money for? As long as I know it's safe, Bitcoin is the most secure network ever, and getting stronger and stronger every day, right? But I truly believe that this article is correct, that there have been no other money that serves all the purpose that Bitcoin does. Now, I understand that, the one thing that a lot of people say about Bitcoin, which I tend to agree with them, but also understand it in a different way. So people say, hey, Bitcoin is not as fast, because sometimes, if I send you some Bitcoin, depending on how much and, how much I want to pay for the transaction cost, and it can take a while sometimes. If you use other things like, some other Ripple, for example, whatever, that's a lot quicker. But Bitcoin is slow because it's secure. And we talked about it a few weeks ago. Would you rather have fast or would you rather have secure? So Bitcoin is secure. Now you can build other things on top of Bitcoin that runs on top of the Bitcoin and just as fast, like the Lightning Network, Segwit, that type of stuff. But when it comes to security, nothing is as secure as Bitcoin. So I'd rather it being slow and being secure because I think Bitcoin functions more as a store of value than it does anything else, right? It can be used as currency, But I think the biggest attribute that Bitcoin brings to the table is more of a store of value. But when you look at the money, the history of money, I don't think anything has ever been created that could be used as money that has all the attributes like Bitcoin does, except for gold. But then again, gold is not easily transportable and it's not as hard as Bitcoin. So Bitcoin beat it in those two avenues right there. What's your thoughts, Mr. Wong?
Well, I think we need to first define what we mean or what they mean by advance, right? And when I think of the word advance, it means to me that it is more superior than other competitions that are in the marketplace. So comparing, Bitcoins in terms of the securities, right? It is more superior to your fiat dollars. Right, you can compare the ease of transportation is more superior than fiat or gold or other stored some kind form of values. If you compare the openness, right, that is not easily manipulated by just one bad actor or one party. Bitcoin is so much more superior, than fiat money or other forms of stored value. So, yes, I would agree. Yes, that it is a lot more advanced, when we compare Bitcoins to other forms of money or stored values assets. That's how I look at it.
Very good point, Mr. Wong. Very good point. Mr. Wong, you're a very brilliant thinker. I like the way you think. That's awesome. Well, look, guys, we're about to wrap things up. Thank you as always for joining us on these live streams. I hope you guys are enjoying these live streams. We're trying to bring you some information, like I said before, information that you can use and apply to your situation, right? Just like we talk about today with the fact that the Federal Reserve came out and announced that their mission is to devalue your currency, your money, right? So why would you keep holding on to something that your very own government is telling you that their mission is to destroy it? I mean, really, when they say that, hey, we're going to debase your currency by increasing the inflation, they're telling you that, yes, our mission is to destroy your currency, your money, right? And then we talk about, the video where we're telling you that, hey, if you are close to retirement and if your retirement is tied up into the 401k, with all these hedge funds, they just passed this law a couple months ago allowing hedge funds to start getting themselves involved in 401k because they try to protect the 401k from these hedge funds because they know how risky they are, but now they're allowing them inside the 401k. That's telling you that your 401k is at risk. So you have the government telling you that they're going to destroy your money, and they're telling you, hey, we're going to allow these hedge funds to come in and destroy your savings and retirement. And you sit on your hands and do nothing? Why? So, guys, please make sure you're taking actions, okay? And the last words for the folks, Mr. Wong.
No, just stay safe, guys. I mean, Philly today just actually had double its COVID-19 infection that I just saw coming.
That's not good.
Yeah. So we've been staying under 180-ish per day infection, and all of a sudden I saw today we jumped to about 150-ish. So please be careful out there. It is still very much happening in our community. You don't know who carries it. Sometimes people that carry it, they don't know it. They're out in public, so wear your mask, right? Keep your hand washing frequent. That's my best advice. Please, we are very close to these, vaccine availability. So, just I believe a couple more months, we're going to be in a much better place. So.
Right. Well said, Mr. Wong. Yes. Make sure you guys practice, safety and look, I get it. I understand that a lot of people don't, believe in the whole pandemic, and I understand certain pieces of it. I'm kind of on the fence in certain areas. I know the pandemic, the virus is real. I do believe that, but I also do believe that the government is using it as a cover to do certain things. And I've talked about this thing that before, but still doesn't mean that you shouldn't practice safety and wear a mask, so you don't catch the virus, and cleanliness, like washing your hands and stuff like that. I always say prevention is better than cure, right? So if it's out there, do what you can to prevent yourself from catching it, basically, right?
Yeah, absolutely. One quick thought about the Chairman Powell, Fed Chair Powell's coming out and saying that the goal was to increase the inflation to about little over 2%. It's really, you think about it, it makes a lot of sense, because the government has been printing out trillions and trillions of dollars, right? And this is a very classic tactics that the economists are using. When you have oversupplied the market with money, you want people to spend it.
Yes.
Right? And by increasing inflation is one of their tactics to try to overcome that issue. So right now we have a greater supply of money than demand, right? People are scared. They're holding on to their money and say, "Oh, I don't know what where my money is going to come from, so I better hold on to what I have or what the stimulus money that I received." Well, no, the government wants you to spend it, and that's one of the tactics that they're going to use to try to get you to go out there and spend it.
That's a good point, but I also think that that could backfire on them. Because like I was saying before, is that the velocity of money is very, very low. And so with all the money printing that they have done, if people start going out there and start to really make an effort to start spending, that will increase the velocity of money. And then that could also add to the inflation target. And like you and I talk about, once that happens, will they be able to control it and keep it just at 2% or just right above 2%?
No.
Right? Because
that's my guess.
Yeah, because you said it yourself. Hey, the economy is like a freight train. Once it gets going, you can't stop it. So if the inflation rate picks up, right, and blows past 2 and starting towards 3 and 4%, will they be able to slow it down? Because the only thing that they could do at that point is to raise rates, right? If they want to slow this, they would raise rates. And can they raise rates? I don't think they can raise rates till into like normalization, like 4, 5, 6, 8%. Because if they did that, a lot of corporations would go bankrupt because they are functioning off of cheap money. So
that's correct.
If they have to service their debt with high rates, they can't do it. Not even the government can do it, right? Because right now we're servicing our debt with on a zero interest rate. So if they start to raise rates 4, 5, 6, 8%, there's no way. So I don't know, Mr. Wong. Interesting times ahead, my friend.
Yes.
That being said, guys, we're going to wrap things up. Once again, thank you for joining us. Really appreciate it. And so we'll see you guys again Monday, same time, 5:30 for next live stream. And then Monday night for the compensation webinar, as always. In the meantime, have a great weekend. You guys stay safe and love each other, protect each other, be good to each other, okay? And I'll see you guys Monday. You guys take care. Have a good weekend.